Great. So maybe let's start with the definition and the taxology. What is ESG for your clients and how has it evolved over the last, let's say, 10 years? And maybe let's start with Ben first.
Yeah, I think it's a good question, right? Because I think it's a word that means a lot of things to different people. But I think one thing that's important to understand is, aspects of ESG and particularly thinking about the G in terms of governance, have been fundamental to the way that investors think about making investments for a long time, right? You think about managing compliance risks, for example. But I would say, and I think this was borne out a bit in the survey that we conducted recently with several GPs in Asia. More recently, there hasn't been a huge difference in how our clients are viewing ESG, especially in Asia. I think there has been some consistency and people are kind of staying the course, despite there being, increased political focus in certain parts of the world on this term. I think in general, there has been a strong tendency for folks to still prioritize ESG in their investment decision making, upgrade their internal capacities with respect to their own compliance regimes with respect to ESG when they're thinking about investments and their internal operations.
And you talked about working with investors, and maybe Marcia, 1 second, I'll ask a subsequent question to Ben. How high is in the agenda of your clients?
I would say that, we have definitely seen both globally and in Asia some de-emphasis on ESG in terms of pressure coming from LPs. But there is a sort of counter pressure that, especially in Asia and certain jurisdictions, there is increased compliance obligations with respect to a focus on certain kinds of ESG risks, including climate risk, both climate risk and also reporting on climate emissions. And so I think there is this push-pull that's happening right now in Asia. And Asian fund managers also have LPs that are headquartered elsewhere, including the US. And so depending on which states in the US those investors might be based in, and depending on sort of the political environment in some of those states, that may also be a factor in terms of, whether they're getting more or less pressure, pulling in one direction or another, in terms of more or less reporting on ESG matters.
Yeah, certainly, Ben, I think in the US, you can say more about this, is that we are seeing people, as far as terminology is concerned, change their terminology somewhat, talk more about perhaps sustainability rather than ESG. Are you seeing that?
Definitely in the US, I would say that that's true. I think the usage of the term ESG has become, more fraught in certain areas of the country. And so while investors by and large are generally focused on the same sorts of matters and risks, they talk about it differently. There is definitely more use of the term sustainability, responsible business, corporate responsibility, terms that actually were used many years ago are kind of coming back.
Great. So, Marcia, Ben alluded to how important sustainability is becoming in the agenda of investors. In Asia, are investors setting up ESG committees, or what have you observed over the last few years?
So over the course of the time we've done our survey, we've definitely seen a much greater trend toward setting up ESG committees, and more importantly, having the people who are on those ESG committees be top level investment professionals, who are actually making the decisions as to what they invest in, and also having those ESG committees actually focus on ESG and not just be some generic committee that was doing ESG, but also lots of other things, HR or whatever. So we are seeing a greater focus on ESG, although we're advising clients all the time who are, at least middle-sized, mid-sized funds who don't have such committees. It's really a grab bag of what you see people doing.
What's the outcome of those meetings, and how have these been evolving over the last few years?
I think it depends on the fund, right? The fund and on the GP. Some of them are quite focused on this area for various reasons. I mean, they may feel a real political attraction or whatever to ESG, but they also are wanting to be recognized as globally relevant funds. So some of the larger funds in Asia really want to move up to that next tier where they are like a global fund, and they think having a big focus on ESG is necessary for getting them into that next tier.
So both you and Ben talked about the political environment and some of the pressures from DLP. So Ben, how are GPs navigating that pressure? What have you observed over the last few years, and how much freedom do GPs have?
Yeah, it's a difficult situation for GPs and for operating businesses too, right? That you may have investors in jurisdictions that are dialing up, compliance obligations with respect to ESG, whether in certain U.S. states, California being an example, or in Europe. And on the opposite, having jurisdictions, certain states in the U.S. where it's essentially illegal or forbidden to even, mention ESG as an investment consideration. So it's a difficult situation to navigate. But what I will say is I think there's a general trend of in this macro environment, the pressure from LPs, I think you can generalize, has backed off a bit. But as I mentioned before, particularly in Asia, and Marcia can speak to this more, GPs are largely staying fairly consistent with their view on ESG, both in terms of internal policies and how they view it in terms of investments. And I think that's, in part in certain really large Asian countries, you have Singapore, China, and Japan, all of which have adopted recently or will soon adopt certain heightened compliance obligations with respect to, for example, climate risk reporting. I'll turn it over to Marcia, who I think has some additional thoughts on, how Asian GPs are seeing this.
Yeah, if there's any backing off on ESG policies and implementation of those policies, what we're hearing from GPs is that doesn't have to do with them not as concerned with ESG, but really because it's been hard economic times in Asia for PE funds, especially in China and around and about China. When you have these difficult times, then something that's going to be mainly a cost center is not something you're going to focus on. They're just trying to make more money.
How do you strike the balance between the cost centers and the opportunity that you can derive by being a sustainable investor?
And that's what we're hearing from a lot of GPs is that the ones who have really started to focus on this area look at it as something they can make money at, either by in a very difficult fundraising market, being able to distinguish themselves from other GPs who are also out there fundraising, but also in situations like when they're selling off assets. If they're selling off assets, if there is a ESG problem with that company that they're trying to sell, it's going to make the disposal process much less smooth, and it may depress the price. So people are realizing that there is a real monetary concern that requires a focus on ESG.
Talking about due diligence, how has due diligence changed over the last few years? And can a deal be stopped for sustainability or ESG matters? Maybe Marcia, you, and then Ben, if you have anything else to add.
Ben and I were talking before about this, is that, I've been doing this for 28 years. And for the businesses that had potential environmental issues, we've been doing environmental due diligence for that whole time. We see a wider scope of ESG due diligence. And the thing that we look at is it being done as a separate standalone due diligence, or is it just sort of meshed in there with all the rest of the due diligence? But in most cases, an ESG problem is not the sole thing that stops an investment, because many ESG problems can be mitigated, right? You can, once you've acquired the company, you can mitigate them. There could be situations, and there were even 28 years ago situations where there would be a real problem, right? That, like super fund liability in the United States, where you knew that you were going to have to pay so much money in order to solve this problem that it would just stop the investment.
Ben, maybe your perspective from the US.
Yeah, I think that's exactly right, and very similar to what we see in the U.S. and other cross-border transactions. ESG is not something off here over to the side. When companies are doing diligence, if there are fundamental problems that affect operations, they may relate to ESG, and that may in fact stop a deal. But it's not a matter of just checking a box on the side. This is diligence that really goes to the core of the company's compliance and risk mitigation.
So we were talking about the LP pressure, the political environment. So greenwashing was one of the topics that people were talking about a few years ago, maybe has been paused now. So in your experience, Ben first and then Marcia afterwards, what are your clients asking you on what's the best way to communicate to the external world and be seen as genuine and sincere?
Yeah. I think this relates to the previous topic when we were talking about this push-pull in terms of more and less pressure, right? Obviously, in the US, we're in a different political environment right now, but there are still states that are leading the charge on things like greenwashing. California has come out with several new regulations over the past several years, particularly focused on climate and disclosures around climate that require our clients to be, more conscious than ever if they're operating in California in any respect, about what kind of things they're saying on their websites. In particular, if they're making any kind of claims about being carbon neutral or, using carbon credits or these sort of things. And so, again, it requires a group of folks working with our clients very carefully to think about where are you operating, where might you have exposure, what have you said. So I think despite a general softening in the overall environment, I think these issues are still quite relevant for folks.
Marcia?
Over the 4 years that we've done this survey, in Asia, on greenwashing, the responses have really changed. When we did the first year, we did the survey, a significant percentage of the GPs we surveyed said that they were making green-related claims. And of that, a significant percentage of those GPs did not even have a greenwashing policy. They did not have in place internally a policy that told them under what circumstances can you make green claims? What kind of evidence backup do you have to have in order to make these claims? They were just out there making claims because it was popular and attractive. Now, almost all the GPs we survey have greenwashing policies, and what they're telling us is they're not making any green claims anymore because it's just too dangerous. Because various countries in Asia have come up with greenwashing policies, so people are concerned and don't want to make any claims.
Staying on the policies, how are funds behaving by size? So the larger funds, the mid-size, and the smaller funds. In their journey, where are they in each category?
So by and large in Asia, the largest funds are the ones who are really leading the way. And they have been working on this for quite a while, and they see this as an integral part of their investment. Every part of the investment cycle, they have applied ESG principles. And the mid-sized funds are now the ones that are sort of getting into the game. And many of them, we end up having to do, trainings for many of these mid-sized funds because they're trying to figure out what should we be doing, where are we ranking with respect to our peers, other mid-sized funds. And the smaller funds, unless they are specifically ESG focused, which there are some of those, but unless they are specifically ESG focused, they basically haven't done a whole lot.
You talked about the trainings. How wide does the training go in the organization of your clients? Is it the whole firm or the investment team?
Usually if we do a training that, everybody will come. So it's the investment team, it's the relevant back office people, it's the legal team, and they will all come to the training.
So staying on the policy, maybe I'll move over to Ben. When it comes to tech and AI investment, how are we in this journey compared to sustainability and environment?
Yeah, that's a good question. I think, and this is an area where I think you do see some differentiation regionally. So when we talk about responsible tech, I think that can mean one thing to a US or a European audience and something slightly different to an Asian audience. And I think this was borne out in our survey data. In Asia, a lot of the respondents said, yes, we're focused on responsible tech. But we see this primarily as a data privacy issue. In the US and Europe, I think that topic is a bit more expansive. Yes, securing data of individual users is important, but also people are thinking about the environmental impact of data center build out and large compute operations and what that means for electrical grid and that sort of thing, as well as the S, what kind of impacts will generative AI have on our societies, how we relate to one another, what we'll do to our workforces. And I think, there is a bit more focus on the E and the S in ex-Asia areas.
And is the ecosystem built the way it is for environment? And what's the cost of this being a new industry with lots of people trying to position themselves? So what do you observe there?
Yeah, things are moving very quickly, and I think it's just a matter of progressing fast and trying to address these issues, right? There are a lot of like the hyperscalers, for example, that are quite focused on obtaining energy from clean sources, right? You see people turning nuclear power plants back on in the US that haven't been used. This sort of thing, is definitely very prevalent in the conversation around AI and AI build out. But that's also not stopping folks from moving ahead where they can obtain those sources, for example. And I think Marcia and I were also talking about this, in the Asian context. Marcia, I don't know if you want to add some thoughts regarding how even more difficult for some in Asian jurisdictions to comply with some of those obligations.
Yeah, we were helping some funds looking at data centers in Asia, and one of the issues that came up is that in some jurisdictions, it is impossible for foreigners, these funds, these foreigners are foreigners in these jurisdictions where they wanted to go into, to actually own renewable power plants. So they can't decide to pair a data center or a group data centers with a renewable power source and hook them up, like they could in some other jurisdictions. So there's limits to what they can do, and data centers are growing at a huge pace in Asia as they are in the US and Europe. But I think that to a certain extent, people are not aware of how much growth is happening in this sector in Asia. We're the top firm for doing data center related work in Asia. And our team that does work on is just constantly busy because it is just going gangbusters.
So as the industry evolve, how is the ecosystem gonna change? Will you expect more advisory firm to come up or more funds hiring internally? If you were to look in the future, how do you see it? Marcia first.
So certainly the accounting firms, the big four, have gotten certainly staffed up on ESG and are doing a lot of ESG related work for their clients. I think that a lot of the work is going to be done like that because the standards that are being evolved are really closely related to sort of like accounting standards and the kind of disclosure you'll have to do in other areas. So I think it will be them who are going to be doing the bulk of the work. Obviously, there will be small consulting firms, et cetera, but I think the bulk of the work will be done by the big four. What do you think, Ben?
I think that's exactly right, especially when you think about some of these new disclosure regimes in Asia that are coming out around measuring and reporting on your greenhouse gas emissions. We currently are under a regime of reporting, direct and indirect emissions. And, I think over time, accounting for those emissions in a way that is more similar to accounting for financial liabilities is likely to emerge. And the accounting firms are going to be very well positioned to assist clients with that.
A few final questions as we are approaching the end of the discussion. We talked about the due diligence when making an investment. When it comes to exit, have you observed within your client, Marcia first and then Ben after, a different approach because they realize that if they prepare and they spend more time in preparing the asset, they will get a higher multiple?
I mean, I think we're seeing that, but I don't think you can start that at the time of disposal, right? You need to do that over the whole history. After you've acquired the asset, you need to have a plan that starts on day one that says, what are we going to do in order to prepare this from an ESG perspective so that when we are ready to dispose of this asset, it is in the best shape possible, gets the best value possible, and has the smoothest process for disposal as possible. So I think if you start when you're ready to dispose, it's just too late.
Yeah,
Ben?
I would agree. And I think it goes back to thinking about ESG not as some, thing on the side, but really something that's core to a company's operations and how it thinks about mitigating risk and really building on that value proposition, as Marcia said.
What happens to those GPs who've invested in carbon intensive assets?
I mean, I think in general, they're thinking about ways to lessen that dependence on, so it depends on the sector. One can't talk generally about this, but there are ways to lessen the dependence, as we were talking about with data centers, huge carbon footprints, but there's things that could be done with renewable energy, et cetera, to make that carbon footprint narrower. It really depends. But I don't see people just disposing of these carbon intensive assets because I think they are hoping that some change can come about, that they'll get a better price.
Ben?
I would agree. And I think tying back to our conversation about, the AI build out, that's alleviated some pressure, I think, particularly in the energy sector where there's just such a need for power, both in the US and abroad.
Marcia, what surprises did you find in the survey? Was there any answer that surprised you?
I thought that it was surprising that 25% of our respondents said that they had changed their policies or made other changes because of the backlash in the US. I didn't think it would be that large. I think 25% is actually a really large figure for that. But these are GPs that are headquartered in Asia. We're not talking about American funds. We're talking about strictly GPs headquartered in Asia.
Ben, anything that you found interesting in the survey that you weren't expecting?
Yeah, well, that's funny because I saw the same data point and I guess I had somewhat of an opposite reaction that I thought the number would be higher, which reflects my, US bias, of course. But, I agree with Marcia, for a lot of these clients that, the US nexus is not that strong. That is a quite striking number. And, I could see it moving even higher without additional US exposure, just due to the thought of, is this a global wave that's just starting in the US and it's going to cascade over other regions. We'll see.
On that point, I mean, I've been surprised in the last couple of years about how strong the push from the opposite direction is from various Asian governments, right? We've been contacted by a number of state-owned large asset managers from China who've been given an order from above that they have to focus on ESG and really focus on it. And how in Singapore, the state-owned asset managers are very, very focused on this issue. So I don't see the US backlash really having a wave effect here.
And final question. So when we spoke a few months ago, you talked about Japan for M&A being the most promising country in Asia. When it comes to ESG, who is leading the way in Asia?
Singapore. Hands down, Singapore.
Great. Marcia, Ben, Thank you so much for your insights, and thanks everyone for listening.